This is episode 9 to the Asian Session Library. Once again, UJ following through with my infamous model. I love this model. Whether you're a beginner, if you're advanced at trading, I think this model is very simplistic for all skill levels during trading. So to begin, we're going to start off at 12 p.m. and we go back to 8 p.m. Now here it's Friday going into Sunday, but I'm using this data to encapsulate the New York lunch session. So the New York lunch session is normally going to give you a phase of consolidation. So it's 12 p.m. to 8 p.m., which is New York Eastern Standard Time. So all this time is in New York. Many people ask, where do I live? I live in New York. So at this point, I like to mark off the swing highs and swing lows that are going to form just prior to 8 p.m. So I'll bring it back just like this. Generally, like I said, you're going to be faced with consolidation. I use a sessions indicator to basically depict what I mean by that. So since this is Friday and this session indicator only picks up Monday to Friday, you can see how it's cut off here going into Sunday. But if you look at the other days, you'll see the indicator follows all the way through. So 8 p.m., so 12 p.m. to 20, which is 8 p.m. New York Eastern Standard Time, normally going to be faced with consolidation. I don't want to trade consolidation. There are going to be moments and times where the market does trend. Not to say you can't catch that. You could potentially probably catch a London close, scalp opportunity going reverse to the intraday bias. But catching this is less likely, in my opinion, unfavorable, because I know that I could run into this. You see how many days you get that tight price action? It's really tight. That price action is not something I want to involve myself with as a trader. It's a dead zone to me. No man's land. Nobody should be trading there in this because you're going to be faced with consolidation. You can see all the blue zones here highlighted with the session indicator is showing you consolidation. And then you can see in moments of time how in the green highlighted areas, which is the Asian session, you'll see how quick and dynamic price moves out of that consolidation. That's what I'm trying to catch, these moments like this. And tonight is a great example. So bringing it back here, I'm just going to mark off the 15-minute swing highs and swing lows. I'm also going to mark off the Asian session model. That's going to be 8 p.m. to 12 a.m. New York Eastern Standard Time, right? Going into noon, midnight. I'm going to find all my swing lows that I have here. And if you don't know what a swing low is, it's simply a candle that is lower than the candle to the left of it and the right of it. It only takes 3 candles. So that's a swing low. You can see this low here is coming in at 144.236. And if you move to the right, you see that candle's low is higher, 144.239. This is 236. And then on the left, you can see it's 245. So that's higher clearly, and that's higher, and that's the lowest in between. That's a swing low. It only takes 3 candles for it. Just a sidebar, we are on the 15-minute time frame. Some people may not have paid attention to that. We're on the 15-minute time frame. That's how I'm using this model. I'm looking for a swing high that's not broken, so these wouldn't count. You can see how the swing high is broken just before 8 p.m. So I wouldn't use that. But I will use the highest high I get right before 8 p.m. Right? The next 15-minute candle, if this is the highest one just before 8 p.m., I'm marking it off. And then we have this swing high all the way up here. Many people were probably waiting for me to get to that one. Above is buy side liquidity, and below is sell side liquidity. Very simple idea that I'm using here. Now, going into this session, I want to see how it plays forward. Now, there's 2 things that I normally think will happen, right? And sometimes you get a little nifty with it. And you'll see how today the things I'm going to tell you is a filter to tell you when to trade it and when not to trade it. 1, good consolidation, right? It's a clear consolidation. If you show this to anybody and ask them what phase of the market do you think is happening here, I think most people will agree this is consolidation. Prices range bound, especially going into 8 p.m. Now, I'm going to wait to see if price runs this high. If price runs this high, it gives me a fair value gap above the opening price of 8 p.m. I would look to go short into it, taking down into sell side liquidity, right? Anywhere down there. Now, I forgot I didn't mark this swing low off as well. There's one here. And then there's one Just make sure there's one here. Now I don't have to mark off every single one, but the most obvious ones that I can see, I can mark them off. These are going to be projections or targets potentially. So if I was getting into a short opportunity, like I said just now, if we're going short, these would be the targets down. Now, I don't have to mark off every single one, but since I want to be transparent, this is what it would look like, right? All this here. And there's even one higher than it as well up here. So all those are swing lows. 1, 2, and 3, 4, right? And then that's a swing high here. And that's the highest high. Now, if we play it going forward, one candle, right? We can see going into Asian session, right? For the next 15 minutes, going into 8 to 8 p.m., price runs up and then it runs down. Let's see what happens above the opening price. So we're going to mark off the opening price here. We're going to make it a dashed line. We're just going to say 8 p.m. open. Going down to the 1 minute time frame, I'm going to see if I got a fair value gap above the opening price. Do we get a fair value gap above the opening price? No, we just see price continue to break down. We do get a small fair value gap here in a discount, but I'm not looking to sell in a discount. I prefer to sell in a premium. Now you may be asking, how am I getting premium and discount? Well, anytime price action is above the opening price for a session, it is in a premium. It is overbought. Anytime price is below the opening price, it's in a discount. It's undervalued. It's oversold. I would like to sell in a premium and buy in a discount. Sell high, buy low. Sell high, take profit low. Buy low, take profit high. That's all I'm simply doing here. I don't see any fair value gap, so I don't take a trade. But then we start to get down here to that sell side liquidity that we had on the 15-minute time frame, right? So we got those there marked off. Those are our sell sides. I don't know where the rest of the dollar signs are. There they are. So we got that 4 levels of sell side liquidity. At this point, we're below the Asian session open. So we're in the discount right now while taking out 15-minute swing lows that formed during the New York lunch session. I will wait to see if we get a fair value gap going up. So opposite to the break, a fair value gap going up. I would like to see if we get that. Let's play it out a little slower to see if we get anything like that. So here, we have a very obvious fair value gap here. As you can see, price is trading right back down into it after taking out that sell side liquidity, this one as well, and getting really close to this one too. Now, many people may ask, what about this one too, right? Right here, the small one. I'm not concerned about that one. Not all the time, but this one is much more feasible because it does what? There's a market shift occurring here while being in a discount below the opening price. So that's your fair value gap highlighted from this candle's high to that candle's low. That candle's low, this down close candle, that low there, to this up close candle's high. That's the fair value gap running through what? A swing high formation. Make this red. That's a swing high that's being rated there. Why is this a swing high? Because the candle on the left has a lower high and the candle on the right has a lower high and the candle in the middle's high is higher than both on the left and right. That's a swing high being broken with a fair value gap. Price is now going to trade into this fair value gap and potentially give us a higher swing low formation. Now, many people that know my daily bias video, it's the same fractal idea. If you're going to go bullish, break a swing high, wait for a higher swing low. And we can see it's most likely going to form in this inefficiency on this candle. We could look to go long here. Does that mean price action is going to continue to rally here and respect the fair value gap? No, because there's going to be times where price may break a little lower than it. But that's why we have a basket of risks. So how would I do this? I would go in long. Minimum, I'm looking for what? 20 pips. Let's make this a little transparent. So if I'm looking for 20 pips, so I'm going to do this quickly here. I'm looking for a 1-to-1 setup. So if I'm risking 20 pips, to gain 20. It's a 1-to-1, a dollar for a dollar. Let me get this marked. Just want to show you guys that it is 20 pips. And then I'll do the same thing vice versa. I'm going to be aiming for 20 pips. So I'm going to get it to a 1-to-1. You see the ratio in the middle there. It's a 1-to-1, right? And it's pretty close to what? That swing high here. Back up there at the top. So that's a good sign as well. That my potential reach or objective can reach up to this swing high, even though it's not beyond, it is beyond 20 pips. But even though my target would be 20 pips, there is opportunity or room to get more. So 20 pip SL, 20 pip TP. And then we're going to play it out a little faster. Notice the fair value gap is below 8 p.m. opening price in a discount while taking out all those 15-minute swing lows. You can see we're in drawdown in that fair value gap. And we can see our price quickly reacts to that, leaving a discount. Look how quickly market all of a sudden turns on a dime for some reason. Gets very excited down here once it drops below 8 p.m. opening price after taking out the 15-minute swing lows. So we're to briefly go back to the 15-minute. You'll see this is what it looks like. Price took out that high. There was no fair value gap, so we didn't look to go short in the premium. And it just broke down. So we leave that alone. But then it came down here and broke these 15-minute swing lows. You can see it comes all the way down here as well. But we got into an entry because we saw the first feasible fair value gap, right? The one that makes the market shift with that swing high. We go long into that. And we can see how we generally just run up and get about 20 pips. 10, 15. And we can see how price continues. So there's going to be moments in time, right? You can see here. Price is coming down and selling and taking out what? Sell side liquidity below equal lows. But normally if they have an agenda to go higher, it's just a sell stop raid. And all those higher lows, let's speed it up, is going to be met with buying. Every time you see the market do this and then go like this, they got the sellers by their neck. The sellers don't know what to do. Right? Every time it comes down, they're really optimistic. I'm going to sell. Then it runs their stops. I'm going to sell now. It's finally going to do it. Then it runs their stops again. It's going to do it. It runs their stops. So there is a seller's remorse going on, right? Psychological remorse going on and on and on because they think it's going to drop. But ultimately, me personally, Deontay would be viewing this as, it's going to keep going up higher. I got the sponsorship down here. Look how quick it runs up here. And it got to that target above that 15-minute swing high. This looks exactly like all the episodes I've posted prior. There's nothing that has changed here. It's very straightforward. Like I said, doesn't matter the skill set. You could be a beginner, you could be a professional, you could be a veteran, whatever it is you are in the trading community, in your experience. I know that this model is the most simplest model, my favorite model to trade, because I don't have to overthink. I don't have to think about a certain specific order block. I don't have to think about a specific area. I just know the pattern that forms is generally the same over and over and over again. I found something that repeats. Now, many people may ask, can this happen on other currencies? Yes, it can happen on GU, it can happen on AU, it can happen on EJ, AJ. Generally, its setup will form, but I like it to happen preferably on yen cross pairs because the time zone and when the Asian countries are trading, right? Dollar, definitely not trading around New York lunch. Asian Open, yen, yes. So hopefully this was insightful. I think this is where we are. This is where we are currently in price. So you'll see that price is going up.